Marshfield is heating up, both the weather and the real estate market. Welcome to our Q2 market update. We're going to go quickly through Marshfield prices and home values, tell you what's hot and what's not in our area, the trends. And my goal is always to point out for you where I think the opportunity is in real estate today. I'm Craig Power with Power Realty Advisors, located in Marshfield and serving the entire South Shore. My goal here with everything we do is to provide value to you at no cost. The way I see it, I like to drop in on you every month or two with real actionable advice to make or save you money. So let's talk. The housing market, Q2 2024. Zooming out compared to years past, it's actually very stable. When I did our annual seller's guide in January, I said I expected boring, stable increases in value. And that's what it's been. It wasn't exactly a bold prediction. I wish I could take more credit. The mainstream single family home market in particular, we have more inventory, more deals, steady competition. It feels healthy. This is what I expect for a sustained period of time. The luxury market, which is considered the top 5% of homes by value, is a little different. We've basically seen that market lagging for 2 years, and that's still slow. But overall, the overall market, it really is moving at a better pace for homeowners or sellers. Moving, the logistics of moving, the buying, the renting, no matter where you're headed, are easier than years past. The interest rate can be a disincentive for a seller. That's no doubt. I don't want to downplay that. The average rate we're seeing today is 7.1%. So when you're trading from a 3 or 4% interest rate up to 7.1%, that's obviously a big disincentive. But that's really the only obstacle, is what I want to stress. Sellers today, we're seeing very few days on market. The median is a little over 2 weeks, which is low. To put it plainly, the interest rate situation is tough. But other than that, as a seller, you're still in the best real estate market, basically in the history of capitalism. It's a good time to sell. It's going to be that way for a while. Buyers, clearly the first-time buyers are at a major disadvantage, right? The first-time buyers, just to get into the market, it's agony for the first-time buyer. And that, unfortunately, I also expect to continue for a sustained period. Importantly, public service announcement, there are some positive changes coming to the real estate agency and commission structure. I at least think they're positive. So supposedly that is coming in July, as of July 1st. I have a video I put out when it was first announced. I'll link here. I'll also plan to provide you a further update on that as it takes place in July. For now, it's just, that's all we know, July 1st. For now, we're just going over market conditions. So let's get into it. Marshfield, let me give you some info and we'll talk more about what I'm seeing. So according to Zillow, Marshfield home values have increased 9.7% year over year. The average home value is $716,000. So compared to nearby towns, it's outpacing Situate at 9.1% year over year. Then you have the Pembrokes and Kingstons around 8%. The hot ones near us are factually Marshfield and Hanover. These numbers, because we are still in what is contextually a low inventory market going on for years now, these numbers can be a little weighted from like one really expensive sale. So when I hear 8, 9, 10% gains for your own home, I might even hedge that down a little bit for your own expectations. So what are we seeing? What are the trends? What's in demand? Buyers are really aggressive for especially the finisher home. I mean, they're aggressive for the starter home too, but especially the finisher home. So really what's at a premium is the 4-bedroom colonial with the garage. Even in dated, poor condition, it's in demand. Or maybe other styles of houses that have that finisher home potential, 2,000 plus square feet above ground level, call it 2,000 plus square feet of really what's qualified as livable space. I have a lot of first-time home buyers that at this point, since they're buying at age 35, 36, they're kind of looking to skip the starter home. They're good earners and they'll really chase what they look at as more of a finisher forever home. Another trend, and I made a note of this here, has been first floor bedrooms. This is more of a niche audience, maybe an older buyer or downsizer that doesn't want to be up and down stairs all the time. And then along with that, of course, we have the remote work trend. So office space or expansion potential is seen as a great bonus. That really goes with the finisher home, the forever home idea that people are willing to pay a premium for. That's really what we're trying to identify here. I can also tell you what's out. and that's buying land and building. You would think it would be simpler. If you want to buy, or if you want to build $1 million home today, just the building, the labor and materials will cost you close to $1 million, not including the land. It's crazy, but it's true. And that is why I would predict, based on these conditions, I predict most of what we'll see built for a while will be the occasional larger cookie cutter development or super high end and highly customized to a specific end user. Right now, the talk in developments in town is all about the MBTA communities law. It's a hot issue, but it actually brings me to a question I like to ask with every market update. Like I said, where are the opportunities today? This is good, intended to be actionable advice for you. The savviest real estate people I know and hear about recognize that, well, first, we have to say, we don't know when rates are coming down, right? So that's a full disclaimer. Don't believe it until you see it. You get a lot of forecasts and opinions. I got 1 million that were telling me we were going to be in the 5s by the end of this year. It certainly doesn't seem that way. So you just don't know. You certainly can't bank on it blindly. That said, the savviest real estate people I know recognize that when interest rates come down, competition will go up and prices will go up like a fulcrum, right? So that's just going to be the response to rates going down. So they're actually trying to capitalize today as buyers. They're definitely buyers, and they're trying to move with the goal of refinancing at a later date. Who knows when that is, right? But I mentioned, the average interest rate today is around 7.1%. So people buying now are thinking about a refinance. They're thinking in their head when it gets to mid to high 5s, when we get there someday, I bet there's even a little mini refinance boom. You can probably count on that. All I'm really saying is the interest rates are a clear disincentive. It's going to be that way for a while, but there may be an edge in taking action and moving sooner rather than later. Thanks for watching. I have some more updates coming your way about the new real estate commission structure in our market. If you're watching this, that will be very relevant for you. I've done a lot of commentary on that. I also want to talk about new rules about ADUs. We have more multi-generational households taking shape in our area. So these huge topics in real estate are right in front of us, and I'm really trying to cover it from a very consumer-focused, very local perspective. I find a lot of real estate video content and social media out there can be like a little me, look at me, look what I sold, which I get. We have to do that. We have to show our work, but I really want to take a different angle and really keep it focused on the consumer, you. So the people right here in our area taking these national headlines about economics and putting them in a local perspective. So thank you for watching. I appreciate your support. Subscribe to the YouTube channel. We have over 100 videos covering personal finance type questions. And of course, if you are making plans to enter the real estate market as a buyer or seller in the next, call it 24 months, that's what we do here. It's never too early to get in touch. So thanks for watching. Have a great day.